High-end Sydney property falls. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I have my stein of coffee. I thought we'd have a look at this news.com.au article discussing falls in Sydney house prices in the higher end of the market. Now, this is quite interesting because several times I've shown this chart. This is showing the differences in unit price growth, where you've got, the red rooster line, the less wealthy suburbs to the west, and the wealthier suburbs to the east and along the coast, where you can see the unit price growth has not been equal, because all things aren't equal, guys. It's kind of why socialism never works, but that's for a different video. So, many people are saying that there'll always be demand for the higher end properties, but then they're also, more valuable. So, a percentage-wise move would maybe seem a little bit more dramatic for the newspapers. Is that what they're talking about here? Let's have a look. So home price falls. Properties in higher-end Sydney regions lose value quicker. Could that be also because foreign demand is what was pushing up these higher areas, these higher regions? And that's pretty much disappeared or reduced significantly at the moment. Property prices have begun to fall marginally after being surprisingly resilient during the pandemic crisis, but homeowners in some surprising regions have taken a bigger hit. And remember, this is before with any of the mechanisms that have been put in place to offset the decline in the economy or the risk that people have from unemployment. Before any of these mechanisms have been set in place, job seeker, job keeper, bank holidays have been withdrawn. Property prices have been falling fast in Sydney's priciest regions while holding firm or even rising in some of the cheaper areas during the pandemic, new research has shown. In some ways, I can't say I'm too surprised with that, because I think a viewer left a comment on another video how they were looking at getting a new tenant for their investment property. And they were told to seek out someone that is on job seeker, because they've got nothing to lose then. If they can afford to pay it on the dole. Centrelink's CoreLogic's latest hedonic home value index revealed prices across the city as a whole fell by an average of 0.4% over May, the first monthly drop in close to a year, but falls were larger in pricier regions. The Sutherland Shire and Hills District recorded the largest falls in property prices for more than a month at 1.5% and 1% respectively. They were also the only regions where home values fell over April. Both markets have traditionally attracted upsizing families due to high concentration of larger houses, and many of the properties are priced well above 1.5 million, roughly 70% higher than the Sydney median. The Hills District also has a significant supply of new properties on the market, particularly in areas such as Kellyville, which has given home seekers more choice and room to negotiate prices down. So this is also leading on to some of the concern regarding the grant stimulus, the new housing stimulus, that it's focusing purely on new builds, that it's going to have an impact on existing stock. And we're seeing this here, this example, in just this suburb playing out, which is one way to achieve more affordable housing, guys. It's that simple. Price drops ranging from 0.6 to 0.9% were recorded in some of Sydney's other premium markets, including the Northern Beaches, Inner West and North Shore. CoreLogic head of research Tim Lawless said price falls in most city regions were only marginal, but more expensive areas tended to get bigger drops because values surged just before the crisis. So we had a property value surge, and now they're pulling back. So I mean, is this a look at these blocks, these large homes? Hang on, is that a backyard? That's not a backyard. Look at that thing. That's not a backyard. Oh, it's backyards. I mean, I grew up in Victoria as a kid. We had a quarter acre. So you had a big, I know I was small, so probably it would have seemed huge to me. backyard. Yeah, backyards really have disappeared, haven't they? They really have. It's kind of sad. Considering how big our nation is, how big Australia is. The markets that led the last surge are recording the biggest falls. They had the biggest run-up in value, and it may not have been sustainable, he said. The eastern suburbs, Australia's priciest housing market, was an exception to the trend, with values rising 0.5% over May. McGrath Coogee agent Nicholas Wise said home sales in the area remained hotly contested because few of the buyers worked in industries that had been directly affected by the economic fallout of the pandemic. Many were doctors, lawyers, and business owners who were confident about their income security in the years to come, Mr. Wise said. Well, yes, I've got friends who are working, radiologist. No problem, But then again, he's probably slowing down a little bit, not rushing. You don't want FOMO to get you. There are still a lot of people in our area with big money to spend, he said. Values in the Ryde region, where the median property price is 1.4, increased by an average of 0.4% over May. This was largely the result of a major drop in detached house listings, which meant home buyers were competing for the same stock. So is this what we're seeing here? Are people, we're not having forced sales. They don't need to sell. Income's been secured by job seeker or job keeper. So they're holding on. They're hoping that the market will recover. The only other regions that recorded a rise in values were markets where prices tended to be under 700,000. There was an average rise in prices of 0.5% in Sydney's outer southwest, which included suburbs such as Campbelltown and Camden. Central Coast prices, which are typically below 650, rose by an average of 0.2%. Prices in the outer west and Blue Mountains regions fell 0.2%, while in the Blacktown region, the fall was 0.4%. Mr. Lawler said he doubted there would be an acceleration in price falls over the coming months because too few homes were being listed. The supply of available properties is low. This appears to have insulated prices, he said. The long-term economic outlook was less certain, he added. It will all depend on the economy. If there is further weakness in the labour market and we see an increase in distressed sales, it would affect the property market. We can see here's the chart of the different falls. So, there we go. You got your month falls, or everything down. Sydney down 0.4, Melbourne down 0.9, Brisbane 0.1, Adelaide up 0.4, Perth down 0.6, Hobart up 0.8, Darwin down 1.6, Canberra up 0.5. So the capitals combined at 0.5, up or down. Combined regionals is sitting at 0. So nationally we're down at 0.4. This is the thing. Combining all these averages overall is kind of useless. I guess it can give you an indicator of where it's going, but there's such differences even in a single suburb. It's crazy. So Ray White, Managing Director Dan White, said the property market was in better shape than anticipated. The sky did not fall in during the shutdown phase, Mr. White said. We know there's a lot of pent-up demand from buyers looking to transact. And I think you will see first home owners take the new grant, take their super money and hit the market. I think you'll see there are people that'll jump in. They'll have security in their jobs. They'll have extra cash. They'll jump in. We'll have to see what happens, particularly in this lower end of the market. The starter homes. If they're building new, I'd love to see smaller starter homes that can be adapted and changed to people's lives. What do you think about that idea? CoreLogic's data is consistent with what we're seeing firsthand in the field. Our data shows such strong buyer demand with increasing numbers of registered bidders, which is supporting prices. So there we have it, guys. There we have it. So the upper end of Sydney is taking a hit with these. This can't be the upper end, could it? These homes are tiny. These yards. Just a bugbear with me, everyone. It's just a bugbear with me. So let's keep an eye on it. Let's see what's happening. It's definitely going to be interesting to follow the market for the next few months. Thanks for watching. Please like, share, and subscribe to the channel. Leave your thoughts, opinions, and comments down below. If you're a fan and you'd like to support the channel, there are a few ways you can. You can join us on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can buy our merch from HeiseSays. You can support us using Gold Pass or PayPal. Take care. Have a great day. I'll see you next time.